So before proceeding to auditor's opinion, I want to bring out some few terms that we use in auditors before starting this presentation. So there's that one. One would be financial statements. So financial statements, to say in layman language, it is the books of accounts of a company, which consist of balance sheet, profit and loss account, and cash flow statements. And one more term which we use in this presentation is annual report. Annual report is a comprehensive document, of a company. It is usually published yearly. It has all the details of a company, the performance, their, what they are going to do in the future, their technology aspect, their key persons, everything will be there in the annual report. Now we are going to discuss a small part of annual report, which is auditor's opinion. Actually, why do we even need to know about auditor's opinion? How is this relevant for any VA working in Growup? So actually, when you're searching about a company, if you have a chance to search about a company, you will be looking for whether the company is active, whether the company is when it is incorporated, where it is headquartered, who are the directors, etc. But it is always good to have a look into the auditor's opinion, which is published in the annual report of the company. Why do we need to look into auditor's opinion? Because it auditor's opinion is like certification, rather to say in a small layman language, it is a certification given by the auditors on the financial performance of the company. So and let us go. This is about auditor's opinion. What are the types of auditor's opinion? See, these there are two. One that is good to go, or rather to consider the safe. If you see these words in the annual report of a company published, that is, one is unqualified opinion or unmodified opinion. We call it as unqualified opinion. Means the auditors would be saying that this company has followed all the procedures that are laid out in the we have Companies Act 2013, based on which all our Indian companies would follow. So Companies Act, based on that, all the statutes they are following, all the GST, everything they are following perfectly. So then the company is maintaining all the records properly. Then auditor would give an opinion of unqualified opinion. That is always a green signal to look for. And then we have qualified opinion or modified opinion. This is, we can say it is an amber. Actually, qualified opinion is not a major risk, but sometimes what happens is that you have to look into you have to look into more details as to what made the auditors to give a qualified opinion. So for example, in our opinion, except here they have mentioned subject to this other. So except for the effects of matters described in the basis of qualified opinion, rest and all is good to go. So rest everything is good. The company is not maintaining everything properly, but there may be discrepancies with the auditors or discrepancies with the management, or the accountant may have kept accounted in a wrong way, or the accounting policy chosen was a wrong way. So such kind of thing may make the auditors go for qualified opinion. So it's always good to see what is they have mentioned, that except for these factors, everything is good. The next comes the types of we can say it's a kind of red flag. Why? Because disclaimer of opinion is like when the auditors are not able to form any kind of opinion on the financial statements of a company. How can that be the case? Sometimes due to calamities, the books got destroyed, or the management don't want to provide the books of accounts to the company, or the records are not accessible. Something such issues can prop up. So that's where auditors will be saying that I'm not able to form an opinion on the financial statements. This is not a major red flag, but you need to know why auditors have issued such opinion if you are looking at the auditor's opinion. So we are unable, this would be the wordings that they use generally. We are unable to obtain sufficient appropriate audit evidence. So based on this, so we are disclaiming this. We are not able to provide a disclaimer. We are not able to provide opinion on the financial statements. This would be a red flag, adverse opinion. Why is it a red flag? Because it means the fraud has happened in the company, or the company are not maintaining proper financial statements, or they have misstated it wantedly. They want to show more of assets, they want to show less of liabilities, which is not there actually with them. So that kind of, for example, these are some of the examples which I'm telling you now. So, and this will, I know this opinion will very badly affect the company, because it it will will play effect on the stock of the company, and play effect of the reputation of the company. So it's always it's a big red flag. So these are the four types of auditors opinion. So that's about it.